The Silicon Siege, the rise, fall, and nationalization of Intel. The fall of an American icon. In August 2024, the world of high finance and deep technology witnessed something that most experts had spent 30 years claiming was impossible. Intel, the titan that effectively birthed the modern computer, the company that put the silicon in Silicon Valley, suffered its worst stock market crash in half a century. In a single, brutal trading session, $30 billion in market value simply evaporated. It wasn't just a bad quarter. It wasn't just a dip in the cycle. It was the sound of a 50-year empire hitting the pavement. For the American public, the shock wasn't just financial, it was existential. For decades, we were told that Intel was the wall. They were the final line of defense against foreign dependency. We were told that the CHIPS Act, a massive infusion of taxpayer support, would secure our digital sovereignty. But as the news broke of 21,000 employees, mothers, fathers, engineers, and visionaries receiving layoff notices, and as the massive construction sites in Ohio and Arizona stood like half-finished skeletons in the desert, a terrifying question emerged. Did the pioneer of the digital age just become its most high-profile casualty? As of late 2025, the U.S. government has done the unthinkable. Moving beyond simple grants, the Treasury has stepped in with an $11 billion emergency intervention, effectively taking a nearly 10% equity stake in the company. Intel is no longer just a private firm operating in a free market. It has become a nationalized experiment. How did the company that once owned 90% of the world's processor market find itself on government life support? Today, we look past the marketing slogans to uncover the arrogance, the catastrophic missed opportunities, and the secret boardroom wars that forced the American taxpayer to buy a seat at the table of a dying giant. The architecture of failure. To understand the collapse of 2024, we have to look at the foundations. To understand the death of Intel, we have to talk about the Intel culture. For decades, this company didn't just follow the laws of physics, they dictated them. They followed Moore's law, the observation that the number of transistors on a microchip doubles every 2 years, not as a guideline but as a religion. But religious devotion often leads to dogma. Intel's success created a feedback loop of industrial hubris. They believed that because they were the best yesterday, their dominance tomorrow was a mathematical certainty. While they were busy perfecting the laptop CPU and collecting massive margins from the PC era, the tectonic plates of the world were shifting beneath their feet. Two new territories were emerging: mobile and artificial intelligence. Intel ignored them both. In 2005, Paul Otellini, Intel's then CEO, made what historians now call the trillion-dollar mistake. Before the iPhone was a cultural phenomenon, it was just a secret project inside Apple. Steve Jobs approached Intel. He wanted them to build the brain for this new mobile device. Otellini looked at the projected sales figures. He looked at the cost of designing a specialized, low-power chip. He saw that the margins wouldn't be as high as their high-end server chips. He looked Steve Jobs in the eye and said, "No." That single syllable changed history. It forced Apple to look elsewhere, eventually partnering with ARM for architecture and TSMC in Taiwan for manufacturing. That no didn't just lose a contract. It created the foundation for a smartphone revolution that Intel was completely, utterly excluded from. By the time Intel realized that the computer of the future lived in a pocket, not on a desk, the race was over. But the mobile miss was just the first fracture. The real killing blow was AI. For 30 years, Intel's engineers were the masters of the serial processor, the CPU. It was designed to do one complex task at a time very quickly. But while Intel was refining this old-world architecture, a company in Santa Clara called Nvidia was perfecting something else: the GPU, or Graphics Processing Unit. Initially built for video games, GPUs are designed for parallel processing, thousands of tiny tasks happening simultaneously. As it turns out, parallel processing is the fuel for artificial intelligence. Intel saw AI coming, but they were bogged down by a corporate bureaucracy that had become more interested in finance than physics. Between 2011 and 2021, Intel spent a staggering $50 billion on stock buybacks. Think about that number. $50 billion used to artificially inflate the stock price and keep short-term investors happy, instead of dumping that capital into the R&D needed to fight Nvidia. By the time ChatGPT changed the world in late 2022, Nvidia was a titan valued in the trillions, and Intel was a dinosaur staring at a comet. The $11 billion gamble. Fast forward to the present day, 2025. The halls of the West Wing and the Pentagon have reached a grim consensus. If Intel fails, American national security fails. The math is simple and terrifying. Currently, over 90% of the world's most advanced semiconductors, the chips that power our F-35 fighter jets, our hospital ventilators, and the servers that hold the world's banking data, are made by one company, TSMC. And they are located on an island 100 miles off the coast of mainland China. If a conflict breaks out in the Taiwan Strait, or if a natural disaster hits the island, the American economy doesn't just slow down. It comes to a dead, screeching halt. This realization is what birthed the Chips and Science Act. It was supposed to be the Great American Reshoring. But by early 2025, it became clear that the original grants weren't enough to save a company that was bleeding cash from every artery. When Intel's 18A process, the manufacturing technology that was supposed to be their comeback move, faced more delays in February 2025, the stock plummeted again. Speculation of a total bankruptcy began to swirl. That is when the Stealth Bailout happened. The U.S. Treasury funneled $8.5 billion in direct grants and $11 billion in low-interest, forgivable loans into Intel's accounts. But this time, there was a catch that sent shivers through Wall Street. In exchange for the capital, the government secured observer rights on Intel's board and a 9.8% equity stake. We are now witnessing the first state-owned tech giant in American history. This is the nationalized experiment. The critics, however, are louder than ever. They ask, why is the American taxpayer bailing out a company that spent $50 billion on its own stock while its competitors were out-innovating them? Is this a return to American manufacturing greatness, or are we just throwing good money after bad? Is Intel too big to fail, or is it simply too slow to succeed? The 18A last stand and the future. Now it all comes down to 2026. The clock is ticking, and the batteries are low. Intel has one final card to play, one last chance to justify the billions of dollars of taxpayer money now resting on its shoulders. They call it the 18A manufacturing node. In the world of microchips, 18A is the holy grail. It represents a level of miniaturization and power efficiency that would, in theory, allow Intel to reclaim the crown from TSMC. It is the first time in a decade that Intel has attempted to leapfrog the competition rather than just try to keep up. If Intel can successfully manufacture these chips at scale on American soil, in the cornfields of Ohio and the deserts of Arizona, they will have pulled off the greatest industrial pivot in history. They will have secured the American supply chain and reborn themselves as the foundry for the entire world. But if they fail, if the 18A process is plagued by more delays, or if the yields are too low to be profitable, then Intel likely won't exist as an independent company by 2030. They will be broken up. The design teams will be sold to the highest bidder, perhaps Apple or Nvidia, and the massive factories will be sold for pennies on the dollar. The Intel Inside sticker, once a symbol of the future, will become a museum piece, a relic of a time when America thought it could lead the world forever on the momentum of its past. The story of Intel is a warning to every business, every leader, and every citizen. In the world of technology, you don't die because you run out of money. You die because you run out of relevance. Intel forgot the core tenet of its own founder, Andy Grove. He famously said, "Only the paranoid survive." Intel stopped being paranoid. They became comfortable. They became a bank that happened to make chips, rather than a lab that happened to make money. The United States has placed its biggest bet in industrial history on a struggling giant. We aren't just betting on a corporation. We're betting on the idea that America can still build the future and not just design it on a screen. Is this the beginning of a second American century in Silicon? Or are we watching the slow-motion sinking of a technological Titanic? Only time and the billions of transistors on an 18A wafer will tell. In 2024, Intel's stock dropped 26% in a single day. In 2025, the U.S. government became its largest single stakeholder. The 18A process is scheduled for high-volume manufacturing in 2026.